Hey, welcome everyone to another episode of Crypto Capsule Commentary, where I cover some of the latest developments in the world of crypto. Today, I'm really going to cover the latest announcement from the UK government saying that they want London and the UK to be global crypto hub. I'll cover what was the statement, what does it mean, what does it include, and most importantly, who are the winners and the losers and its practical impact, not only on the crypto ecosystem, but the broader financial services ecosystem as well. Hope you're ready. Here we go. This episode is brought to you by YieldApp, an innovative digital wealth platform that allows both retail and corporate clients to earn passive income at the touch of a button. Earn market-leading rates on some of the world's biggest digital assets, compounding and paid daily. And if you're a corporate client, YieldApp offers a secure treasury for your digital assets, and its dedicated relationship management team is on hand 24/7 to facilitate a stress-free experience. Sign up through the link in the description or post to receive a $30 bonus. Okay, so the big development that happened was on a Monday, April 4th. Basically, the UK government came out and actually said that they want the UK to be leading global crypto hub. Really, two things happened. There was a keynote speech by John Glenn, the economic secretary to the Treasury at the Innovate Finance Global Summit, basically that laid up in a very, very impressive speech, actually, what is the plan and how they're looking at this. And there was the same day kind of a news bulletin, a press release from the UK Treasury that really set out in more in detail the plan that they're going to move forward. Now, first of all, what does this include? Well, what does this plan include on a practical perspective? There's a couple elements. First of all, they want to make stablecoins a recognized form of payment. And this is very important because obviously there's been a rise in the world of stablecoins. There's now over $180 billion in stablecoin assets. And really the fact that the UK wants to recognize stablecoin as a form of payment is very interesting, and definitely it can have a big impact on its usage and actually how attractive it can become as a crypto hub. Second thing that the UK is looking at doing is introducing a financial market infrastructure sandbox to enable firms to experiment and innovate. Again, let's not forget the UK was really probably the jurisdiction that pioneered the concept of a sandbox. The FCA was one of the first ones to have it in the fintech world. So it's not a surprise that they're using the same approach now when it comes to crypto firms, especially if you consider many of the traditional financial institutions who are based in the UK. And number three, the third thing they're looking at doing is really establishing a crypto asset engagement group to work more closely with the industry. Again, many jurisdictions have this. There's nothing novel, but obviously something that is very positive. Basically allows the government and policymakers to have a direct bridge, a direct link to basically the crypto community without the lawyers and the consultants, a lot of the intermediaries that come in the middle normally. And this not only actually allows each other to hear and share, and most importantly, listen to each other, but actually allows that to make sure that there's actually line of communication between both, which is very important. So I think that's a very good development as well. Fourth is they're going to look at ways of enhancing the competitiveness of the UK tax system. And this is very important because they mentioned explicitly they're going to look at elements like borrowing, lending, staking, but also at looking at what is the tax impact of crypto assets for asset managers. I mean, London is home to many hedge funds, asset managers, long only, long short, and many other strategies. And what is the tax impact of these managers trading crypto? There's obviously a lot of uncertainty there and some need of clarity. And this is something they're looking at addressing, which is obviously very, very positive from that perspective. This is a problem across all the big crypto hubs, whether you're in the US, whether you're in Singapore or Hong Kong, anywhere. There's always still this uncertainty if you're an offshore fund or you're an onshore manager managing offshore fund that is trading crypto assets, what is the impact of those trading. And finally, the last but not least, the thing that they mentioned is that the Treasury is going to be working with the Royal Mint to develop an NFT this summer. So very interesting. Again, if I told you a year ago that you'll have policymakers and regulators and central banks looking at NFTs, you would have laughed. And now we're seeing even the UK, looking at working with the Royal Mint. So this is all good. So I think this is the big highlights of what they're looking at doing. Now, who are the winners of this, right? So by far, there's no doubt the biggest positive winner of this is the crypto community in the UK. The crypto community in the UK has been lobbying for a long time to try to get some clarity, to really try to have this framework where they can operate. There's quite a number of crypto companies based out of London, out of the UK, many of these players have been looking at setting up or have set up a presence either in the US or in Asia and or in many cases in the Middle East as well. So the question is, often they were doing this because of expansion, but the reality is they were also doing this as a hedge because of the regulatory uncertainty or the regulatory lack of clarity back in the UK as well. So I think definitely the winner will be a lot of these crypto firms. There's quite a few of them. Some of them are quite big. And this is actually very, very welcoming news from that perspective. Second winner, I would say, is our stablecoins. Like I mentioned before, we have $180 billion in assets in stablecoins. The fact that a jurisdiction like the UK is looking at recognizing them as a form of payment sends the right signal, the right messaging. I expect many other jurisdictions now to do the same. Some of smaller jurisdictions, now that the UK is looking at doing this, it becomes kind of okay to bring this forward as well. So very, very interesting development from that perspective. Now, who are the losers? It's difficult to find a really loser in this situation, but I would say some of the other jurisdictions. For example, in the US, in the North America right now, obviously the US is, again, a very big global crypto hub. In Asia, it's probably Singapore because Hong Kong has a lot of these problems now with COVID. But really the big elephant in the room, the big growing rising star right now is Dubai, for example. Over the last couple of weeks, you had many of the large crypto platforms announce that they've signed MOUs and they want to move to Dubai. Many companies are doing so as well, using it as a hub, not only for Asia, it's only 4 hour difference, but also for Europe, EMEA, the Europe, Middle East, and Africa. Obviously, Dubai is very well located from that perspective. I think the big competitor that Dubai needs to look at right now, and vice versa, is actually London. If the UK gets its act together, I think many companies based in the UK would think twice before potentially setting up another presence or headquarters in the same or more or less time zone. The other one, actually, this is obviously comes in the back of some of the regulatory developments that took place in Europe, where obviously it's been, let's face it, it's been very anti-crypto. I won't have time to go into it today, but basically this is a very good contrast where the UK is trying to position itself within broader Europe as a great hub for crypto. One other party I've been watching as well is what's going to happen with the banks, the traditional financial institutions. A lot of traditional financial institutions were in London. A lot of them are based in the UK. Many of them were not moving forward that as quickly as they could on crypto. Often they would give the excuse that they don't know what regulators are going to say, they don't know what treasury is going to say, they don't know what central banks are going to say, they don't know what policymakers are going to say. Now there's no reason whatsoever. Really, it's very clear the direction the UK government is going with this. So I think for a lot of the financial institutions now, many of them, they were using this as an excuse, and now they have no excuse whatsoever, and they will need to actually accelerate their crypto plans and strategy. So I really expect to see an increase in the speed of activity we see from traditional players when it comes to crypto. So again, very interesting development. This is definitely good news. And I think from that perspective, I think people in the UK, the crypto community, should be quite happy with this development. So very interesting development to watch and keep an eye on. Hope this was useful. Again, short crypto capsule commentary. If there's any other topic or subjects or developments you want me to comment on or you want my point of view, feel free to let me know in the comments below or message me directly. I'll look forward to coming back and sharing with you all again for another episode of Crypto Capsule Commentary. See you guys soon.